Good morning, everyone, and welcome to an event that is finally different than just everything else that's out there. This is all about just focusing your workflow, your discipline, your psychology, and how to get in front of just a recipe for success. This is something that, I've been excited to do for a long time because it's not just strategy. It's not just, here's some patterns to look for. Here's, look for this to find a profit, look for that to find a profit. This is about how to structure a trading business, and a trading business is a hard thing to put together. So we have been trading professionally now for going on almost 30 years. Sad to say, but happy to say, but sad to say, right? It's been a long time, and we have definitely been around the block a couple times with this whole thing, and we're excited that we're still doing it, and it's the key to a happy life, to a good life, to having a smile on your face and being able to go do things and, exciting things and fun things out there. The key to the whole thing is to have a good system in place to get yourself in front of opportunity and not make yourself nuts. So there's a lot of coulda, woulda, shoulda in trading. There's a lot of, feelings of regret, anxiety, disappointment, remorse, all that stuff. And I think that what we're going to talk about today is something that's key to getting around all of that and just, stay on the right side of this thing. It's not easy, but it's something you can do. So when I'm talking about trading, I'm talking about something that my wife, Julie, and I, that's her in the picture there. We started doing this as soon as online trading became a thing. We started in graduate school, and we were PhD candidates. I was working on an MBA and a PhD. Julie was working on a master's in public policy and a PhD. And really, what we were geared up to do once we got out of school was, high-powered consultancy kind of stuff, and go out there and work for the McKinsey and companies of the world. And we sort of met later than we wish we would have. And, we didn't get married until we were almost 30 years old. And we were just like, well, we don't want to travel all the time. We don't want to, be on the road 24/7. And luckily, while we were in grad school, we had started collecting data about trading. And, it was a very logical thing to do because when you're in graduate school, one of the things that, you really want to do is collect data about something and analyze it, and in our case, human behavior. We're both psychologists, and my PhD is in organizational behavior. Julie's is in behavioral finance and social psychology, and this was a real logical outgrowth for us of what we had studied. And by the time we graduated, my mentor, who was a guy named Peter Drucker, he was on my committee, and he just said to me, he says, well, what are you going to do now? And I said, well, I guess, we're off to do some consulting work. And he just said, let me share something with you. I'm the top paid business consultant on earth, right? He was definitely not shy about how successful he was. And he says, take it from me. If you've got a profitable business, stick with it, because it's the hardest thing in the world to do is start a business and, have it go down the right path and have it be profitable. And that's what trading was. So we had developed a method of trading the markets that was based on a lot of the stuff that we learned down there on the floor of the New York Stock Exchange, all about the fact that behavior influences trades. The guy on the other side of the trade is always the person you need to be thinking about, or the entity you need to be thinking about. It's not a zero-sum game. It's all about just figuring out where the market's going and what can I do to stay on the right side of the market. So we put this thing together, and we decided that rather than at some point come back and be college professors, which is the logical thing to do if you follow the path that we were on, we were going to go ahead and teach people at some point how to trade. And over the years, we've taught a lot of people how to trade. So that's been a big goal of ours, a big passion of ours. We're probably more passionate about teaching than we are about trading. But trading pays the bills. You're not going to get rich teaching anybody anything, at least not the way that we do it. So we're all about, going through teaching a small group of people every year how to trade the markets, what it is that we've learned about the markets over time, and then we're friends with these people forever, and we talk to these people, and they're in our trading room with us each and every day, and we've been very, very fortunate to be able to work with them. So, what it's also given us is lifestyle. We've got this incredible life where we're able to spend all sorts of time with our kid. We take him all over the world. We take him to New York as often as we can, take him down to the New York Stock Exchange, spend all sorts of time, just focused on this business, this thing that we love, this thing that we do. And I think it's important that, that you like what you're doing or you love what you're doing, and we definitely do. So part of this is about how do you structure this so that you can take a business and make it fit just about any style that you want to have in your life. And in our case, it involves a lot of travel. So you guys, if you're in the trading room with us every day and you're following along with what we do, we travel quite a bit. The travel time is something that's been afforded us entirely by the fact that we can go and compartmentalize our business, and that's why it has been just a conduit. This business has been the thing that's enabled us to take our kid. We homeschool him, mostly. He goes to a hybrid homeschool kind of an environment when he does go to school. But it's enabled us to homeschool him and take him all over the world. He has been all over the world 7 or 8 times, and so have we, and that's the greatest part about what we're doing. So if we trade from 3 o'clock in the afternoon until 5 o'clock in the afternoon in Europe, or we're trading from 6:30 in the morning until 1 in the afternoon Malibu time, so when we're at home here, or we're trading on the East Coast, or we're trading in the middle of the country, no matter what, we're able to travel a bunch. And a big part of this is psychology. And the psychology that this has represented for us has been tremendous. Now we're doing a TV show. It's called Trader Nation. Trader Nation should be back on the air in summer of 2024, and it's all about the psychology of trading and the things that motivate people to trade, the things that put people in front of the computer screen, make them want to do this for a living. It's a kind of a crazy way to make a living. We talk to top traders. We're talking to folks who have done this for a living for a long time. We're talking to people who are in the alternative investment arena. And, we're talking to people about their market strategies, and we're also going out there and just asking people. We've got a segment called America Asks, where what we do is ask people to chime in and tell us what it is about trading that they're thinking about or confused about or what they want to know. And one of the big things that we've had on the show a couple times has been this issue of time management and workflow, and what do you guys do to make this interesting? How do you guys prevent arguments in the office? We're a husband and wife trading team, so obviously that's got its challenges as far as most people are concerned. For us, it's a no-brainer. We've been doing it for so long, it's second nature to us, but we've never been at the point that we came in here and we're ready to kill each other. So, what is it about trading that makes it work for us? We've done a bunch of articles. I've written so much stuff over the years about strategy, and each one of those strategies is a certain part of the day typically. So we've got strategies that represent the beginning of the day. We've got strategies that represent the middle of the day, things that are automated, things that are discretionary. All those things have been, a magazine editor will come and say, hey, could you write us an article about, this thing that you do that's the opening gap strategy, the 2SD opening gaps? Well, sure. Could you write us a thing about this Apple trade that you do? Yeah, we could. But really, it's the way the pieces of the puzzle fit together that makes this a business that is sustainable and enjoyable and really something where you've got a lot of freedom that you wouldn't have doing anything else. So when I talk psychology, I always want you to remember, so if you're one of the guys who's been through our boot camp, as I said, it's only 20 people. We're doing one again in May. actually in the beginning of June. So end of May, beginning of June is the next boot camp. And it's all about the people who are there. And the reason we keep it to 20 people is we want this to be a year-long program where we can get right up in front of people. They can call us, they can ask us questions. They meet us in Miami Beach. We do it there because of the time zone. It's just a lot more conducive to doing live trading. We do live trading with the guys when they're there. So first, before they come, they work through 20 hours of course material. Then when they get there, they're doing live trading with us. They've already been through a 650-page manual. They've been through, a workbook that guides them through the thought process. And when we get there, we want everybody to be on the same page, but we realize that as you go around that table, as you look at any one of those groups of people, there's physicians, there's architects. I'm looking at it. There's cops sitting there. There's a couple of attorneys in the bunch. There's a couple farmers in the bunch. There's a guy who was a pipe tool and die maker. There's a guy who had a cattle ranch. I'm just going around the table here and saying a bunch of different backgrounds, same goal, tons of different psychologies. So when you look at a group of people like this, what you have to realize is everybody brings their own range of experience. Everybody brings their own strengths. Everybody brings their own challenges. When I wrote Around the Horn, so Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, that was the first book that I wrote about trading. And that book was all about what I see to be the most logical way to trade the market. So when you go through Around the Horn, what you have to realize is it's about market cyclicality. It's not available right now. So there'll be a new version of Around the Horn, I promise, sometime either late 2024 or beginning of 2025. My publisher has just about had it with me because I am super late putting this thing together. But it's about market cycles. It's about the liquidity cycle. It's about the fact that every quarter, every month, every day, right? Everything is about market liquidity. So you've got periods of consolidation, you've got periods of markup, you've got periods of markdown. Every one of those gives you something that's tradable that you can do. And every one of those then is represented in those patterns in the book. So if you want to join us, you're more than welcome to. I'll show you in a second here how you can get a free trial to what we're doing and just sort of watch along with our trades every day and see if this is a style that's for you. But the book, the methodology, nothing's changed, by the way, since 1997. So we've been doing this exactly the same way from the get-go. And it's because it's about the way that markets behave, and it's about the way that people participating in the markets behave. And it just gives us a really firm footing to go and say, what's our expectancy? What do we think is going to happen next in the markets? And based on what the expectancy is, right, how likely is the outcome that we're looking for, going to be? So what's the probability that an outcome is going to result in something favorable for us versus something unfavorable? So, if you're looking at everything that we do, we take our day, and really what we're looking to do right out of the open is to break the day up so that we can structure things in a way that's going to make sense to us. I don't want to be overwhelmed. So when I get up in the morning, it's 5:45 in the morning. I'm not probably at my best, right? It is not the time of day that I think, I'm sharpest. This is the time of day that I really need to have things put together ahead of time. And in that spirit, what I do is I set up a group of trades that I call the Around the Horn trades. Those are NYSE program trades. So I set up trades that are going to execute on the NYSE. They are program trades. They're set up ahead of time. So it's a conditional order for a group of stocks. And it'll say something like, if XYZ is trading below $50 per share, then buy, stop, limit, $50.10 stop with a $50.15 or 20-cent limit, and then I'll set up a stop loss, and I'll set up a bracket order that gives me a profit objective. A stop loss cancels out the other leg of the order. All that stuff happens automatically. We've also got NASDAQ program trades. The NASDAQ program trades is something I call XRV. That is a trade that goes through and goes all the way back to when we started trading, where you're trying to benchmark which institution is doing the majority of the trading. And based on the fact that you think that a certain market participant is a buyer or a seller, over the course of the session, you're going to go through and try to shadow those trades tomorrow. So, when today rolls around, it's first thing in the morning, I've got those trades set up and ready to go. Then on the open, we're doing a trade in Apple, and that's an arbitrage kind of a setup where we're looking at trying to follow in the footsteps of what market makers are likely doing based on what happened in the pre-market. And once the first 5 minutes of the trading session have gone by, we start looking for our 2SD opening gap reversion trades. So we've got a lot of stuff that's going on, but actually not a whole lot of intervention on our part until that first 5 minutes are up. And at that point, we've got a very limited group of things that we're looking at. So we're just looking at opening gaps right then. Once the first half hour of the day is gone, we start moving into order flow trading. So now we start looking at the QQQ, we look at the NQ, we look at the Magnificent 7 stocks, we're looking at the high flyers of the day. We're just looking to see, what's going on that we can participate in, and what's the best vehicle for us to go and capture some of what's going on in terms of the order flow in the market. Now, I told you, if you want to join us, and if you want to do some of this stuff with us, you can just go to TradeInsight.com, TradeInsight.com, and then it's /trade, TRADE. And you can join us for the next 2 weeks and see what this is all about, see what it is that we're doing all day, every day. Basically, what you're going to get is a good lesson in workflow. So we are not there to provide entertainment. This is not a dog and pony show. This is, you're going to get there. It's a very, very structured environment. We trade, but it's pretty much the first hour is very active, and then there's a break for about an hour, and then we come back, and then we're active again right up until about an hour before the closing bell. That's because these are the parts of the day that we've identified as being, very, very profitable, or very capable of handing over the opportunity for profit anyways. And the rest of the day, we're going to stay clear. And you're going to see that we've got times of the day that we know are reversal times. There's the bond market close, and just sort of standard S&P reversals that we know are going to happen. Those are all times of the day that we are hands off. But it's all very similar to this. It's like a show clock. So again, pre-market, XRV, and the around the horn trades. Opening bell, we execute our Apple opening trade. 5 minutes in, we look at the 2 standard deviation trade, the Baltimore chop trade. And after the first hour, right, one of the things that we're doing is Julie is responsible for, she monitors the program trades that we do. And I am then going to start looking at setting up some of the more active, some of the order flow trades. Let me just give you a wide shot here of our office so that you can see what I'm talking about. So, over the course of the session, I'm sitting over here, and I've got all this stuff going on behind me. Up top, I've got the indices. On the middle screen down, I've got Apple. On the lower screen behind me, I've got the Qs. I've got the NQ, the futures trading that I'm going to look to be doing. And then, over here, this is where I'm doing the Magnificent 7 stocks. And back there, those are my program trades. Those are my XRV trades. Over here, Julie is handling all of the other stuff. So she's just monitoring the around the horn program trades, the stocks to watch program trades. She's going in and figuring out, are there inflections at significant support and resistance? Is there something here that that we should be aware of? So we've got our hands full, and the key to our trading business is there's two of us here. The key for the guys in the room is they don't usually have two people there, so our trading room is all about just keeping people cued in and aware of what's coming next, and how can we get them in front of the opportunities and keep them aware of what is queued up in the same way that they would be if they had somebody in the office with them. And when it comes to the rest of so that first part of the day is very much about exactly what you're supposed to do before you're going to do it. The rest of the day starts into discretionary trading, which is really, oddly, what most people are drawn to, but most frequently this, the siren calling from the shore is a trap. And you don't want to go crashing into the rocks, because it's very, very easy to get caught up in things that you think are going based on momentum, based on, oh geez, I've seen this before. I think, yesterday when I saw something like this happen, it took off, so I'm just going to jump on. And it's usually a disaster. So what we wind up seeing is a lot of people get themselves into a position of revenge trading. I don't know if you've heard that term before, but revenge trading is really about I got long, and then it went down, so then I got short, and then it went up, and then every time I do something, the market seems like it's going to do something else, and people will go, and just because they're angry, will just blast off trades and put themselves in a really, really bad position very quickly, and have a hard time digging out of the mess. So discretion looks exciting, it looks attractive, but if you don't have the discretion planned ahead of time, so everything that we do is about careful planning. And I would never in my wildest dreams take trades based on what I think is going to happen. It's about what's the market actually doing, what's going on right in front of me, what things do I have objective evidence for versus what's my gut telling me to do. Because I can, a little secret here that most of you are aware of, your gut's usually wrong. So pre-planning even your discretionary trades, when you have all those entries and exits figured out ahead of time, it's really going to reduce the number of trades that you get into and increase the profitability of those trades once you're in front of them. Everything that you do needs to be analyzed from a top-down perspective. You need to know exactly what the rules of the road are, what exactly it is that you should be doing before you go and execute the trade. So here's an example. This is the fastball, the XRV trading setup. So this is one of the program trades that I put together for a day that's that we're going to have live positions. And so I'm loading these up before the opening bell ever rings. I load these up the night before. So these are, I'm using Realtick as my trading software. I put these things in at 9 p.m. Pacific time. That gets me at midnight Eastern time. So everything has been reset and I'm allowed to put my trades in for the following day. And I'll just go load these things up and set them going for the following session. So you can see they're year to date. This is about $23.50 per share traded. That's a little light compared to other years, but I don't care. Because what I really care about is the ability to just go and put these trades out and let them run on their own in the background. Because that's $23.50 per share traded that I wouldn't have if I wasn't trading these. And if I focused my attention on doing these things manually, on getting in there and trading this stuff actively over the course of the day, I would miss out on the other opportunities in front of me. So I know ahead of time exactly what I'm going to do with each one of these positions for the following day. I know exactly how to load the trade up. And furthermore, what I know is I don't have to watch it once the trade's on. The only thing that I'm doing is monitoring at times, did it just barely miss a profit objective? I've got alerts set up, did it miss by 2 cents, 3 cents, 5 cents, whatever? Do I want to take something off on its way to the target? Do I want to take something off because it's been 50% of the distance to the target and it's reverting and it's getting close to the close, right? Those things are things that I'll go back and just have a look at. But for the most part, once this thing is set up, it is just entry, stop, target. So you see there, I've got in real tickets just set up to trade from the lines. In this case, you've got a green line is your entry trigger. When it goes down through that, that is your short sale on this Acadia Healthcare here. The green line is your short. The blue line down below it is your profit objective, and the red line up above is your stop out. And you can see there that when the day started, so you've got your day separator down sort of the middle of the chart there. You can see it. That tells you market's open and automation is in effect. It triggers you in on the second bar of the day, and then over the course of the next 3 hours, it winds up down at the profit objective. You're not spending 3 hours brooding over this thing. You know that all those stocks on that particular trading plan are loaded up, they're ready to go, and they're just going to take care of themselves. So now, you've got that trading plan in effect, and then you've got your around the horn trades. So in this case, right, on this day, boy, this looks like a handful, right? This gouge sheet is what, 7 stocks deep. That's a lot to be watching. And again, the beauty of this is you're handling your workflow. You're managing your workflow in such a way that you're not watching Abbott and what's on here, Abbott, Aflac, right, LRN, TPH, VEV. You're not sitting there brooding over all of these stocks. What you're doing is you know that you have a plan in place for each one of these things. If Viva triggers, right, I know what I'm going to do if I'm sitting in front of the computer. If TriPoint triggers, I know what I'm supposed to do if I'm sitting in front of the computer. Each one of these things can then just be automated. And, why do I have to be here pushing buttons if I already know what I'm going to do if a certain threshold's hit? This is the way you keep your sanity. This is the thing that you do to let these things play out on their own. And you know what your plan is. You know what your discipline is. You know what the rules are, right? If I get an entry, I'm going to get in, whatever it is, long, short. I know what the trigger price is. I know what the activation price is. I know what I'm supposed to do. If that entry has triggered, I know that I have an initial target and that I have a stop loss, and that if I get 50% of the distance to that initial target, the stop gets moved to break even. That's something you can program. If it gets 10 cents to the target, the stop gets moved to 50%. We know how we're going to handle risk. Risk is the most important thing to be aware of when you're trading. Risk is the thing that you have to mitigate at all times. And we get in to very detailed analysis on all of this stuff. So when I'm looking at this, I'm not shooting from the hip. I'm not asking myself, does it work? I'm telling myself I know that it works. And if I'm looking at the yearly distribution for this year, then what I see here is that once again, I've got another strategy. That strategy has put up another $25 per share traded. Or if I'm going to go and trade just this as an active strategy and nothing else and just go 4-to-1 on everything that I'm doing here, I'm up 40% in a trading account, and it's based strictly on the fact that I did what I said I was going to do. And those numbers, again, are consistent. When you take your trial of Trader Insight, you can download these gouge sheets and these Excel spreadsheets going back to 2006. You can see the results all the way back to 2006 of every trade that was planned, every trade that was executed, and you'll see exactly what the results were for that trade. So that's all right there. When you take that trial, when you come in, TradeRinsight.com/trade, you'll have access to this data, and you can go through and just see it's year over year over year. These things perform pretty much the same way. 2008 was an outlier. 2008 was our best year ever, and that was because the market imploded. And we can, as you can see here, when the market gives you a lot of short side opportunity, you wind up with some pretty fast profits. And you can imagine that when the overall market starts going down, the fact that this is very good at picking off the long or short probabilities of the market, that'll go and it'll really work in your favor. But that's not the thing to focus on. The thing to focus on is I can tell exactly from this pattern distribution up on the left side here, that pie chart. I can look at that. I can look at the triggered patterns. I can ask myself, was I cherry picking trades based on I saw a pattern that I liked? Long to short. If long and short presented equally over the course of the year, did the long to short triggers that I had present equally over the course of the year? And what was the long to short profitability? You can see we've got a big section of the pie. The majority of the pie is red. Those are shorts. Well, the majority of the profits came from the short side of the market as well. That's the chart down below there. And then go to the left, overall profitability. Right? How many winners to how many losers over the course of the year. All this stuff gives you access to the data that you need to figure out if your workflow is generating then the profitability that you need to see in the market. Now look, we've got an opening trade. Here's your opening trade in Apple. So this was the other day, for those of you who were in the room, pre-market, we established 171.39. That was our go line. So that was the area that we expected to see a pop to the upside if the market traded there, right on the opening bell. So just look at the very left side here of the chart, sort of between that big 8 a.m. spike and that big 9:30 spike. That's where we're focusing our attention when we're analyzing this stuff. And you see, the market came back, retested that level. We know that the market makers, based on the volume by price cluster analysis that we did, in the pre-market, we know very, very likely if price gets back there, they're going to hedge their bets. They're going to even up. They're going to go neutral. They're going to try to get this thing as neutral as they can. 1 spot 39 winds up being an entry. 2 spot 61 is our profit objective. Piece of cake goes up there and hits it. 171.10, that would have been our stop out. You can see that later in the day it tested that, but we don't care because we were already out, because that's a programmed trade. That's part of our workflow. We set that up on the open and we let it roll. Then you've got the opening gaps. Look at this. Holy cow. There's a long list of stocks on this day that made a 2 standard deviation of volatility opening gap. This is one of these trades that put me on the map. This is why a lot of people know who I am. This is this trade that I called the Baltimore Chop. So it's a 2 standard deviation of volatility opening gap trade. And when you get a long list like this, it's easy enough to pare these down. We go through. This is what we're doing in the room. We go through. We talk to our guys. We tell them, okay, here's a list of 10, 15, 20 stocks. Here's the 4 that I'm looking at. On this particular day, we had SQ, we had FLR, we had W, we had LYV, we had BFAM. Those were the trades we took. Why did we pick those? Well, because they're stocks that we know, and they behave in a manner that is very consistent whenever they have these gaps. And by the way, I'll go back to this for a second here. We look through this list and then we parse. We parse for earnings. We make sure we're looking at stocks that are trading on earnings. We make sure that they're liquid. We make sure that that volume number there, that's right on the opening bell. The spread, right on the opening bell. So it's not as hard as you would think for us to go through and manage that data. And that's one of the things that we talk about at boot camp. That's one of the things that we teach our guys. We go through and we say, look, you can't trade all this stuff. I don't care what you're doing. I don't care how long you've been doing this. I don't care how good you think you are at it. You're not going to trade all those stocks. So you need a way to sort through this stuff. Number 1, is it earnings? Number 2, is it liquid? Number 3, what's the spread? Number 4, have you traded it before? But before you know it, you're down to a list of stocks that makes sense. And here you see this is Live Nation, I guess, and you've got that opening gap, and then what I call a 1, 2, 3 setup. So it's just a higher low, another higher low, higher low, higher low. And when you finally get a bar that is the deepest low in this move to the upside, then you draw that green line. And that green line's your trigger line. And you're going to do this every single time it makes a new higher low. You're drawing a new line. And you're just saying, okay, if it gets down through here, I'm going to take this. This is a short side of the market. I'm going to take this short. And you're doing this for the 4 or 5 stocks that you pulled up. You're setting an entry. You're setting a stop. The stop's the red line. The blue line's the target. It's all based on order flow. It's all based on price action. This is not... I'm not going to say it's not difficult. It's difficult to wrap your head around at first, but all our guys do it. Our guys are, everybody who's been to boot camp, 90% of those guys are making their living trading, and they're doing it based on simple metrics like this. Looking at the order flow, looking at a simple price pattern, looking for where is the exhaustion. That top there, that deepest bar in that 1, 2, 3, 1, 2, 3, 4, 5 pullback, whatever it is, the deepest bar there, it's obvious the price is exhausting for now. When it gets down to the profit objective, we've got that profit objective there because the last time price got there, it took off to the upside. We don't want to be part of that. And if we short it and it immediately goes against us, we know that if it violates the high of that little bar that generated our trigger there, well, we know that then that's invalid and it's a good reason not to be in the trade. We always want to have a good reason to be doing whatever it is that we're doing. So that is the second trade of the day, is the opening gap. So what happens after that? Well, then it's 7:30 in the morning and our workflow changes. I start mapping the triple Qs because what I'm going to do is trade either the triple Q or the NQ as we get a little bit further into the session, but I don't touch these until 11:30 Eastern time. So I'll go through, and you can see this is my analytic chart. So in the top chart, I'm looking at the relationship of price to the VWAP. In that bottom left-hand chart, I'm looking at natural support and resistance. How does it line up with the volume by price cluster analysis? And how do the anchored VWAPs for the session line up with those support and resistance levels? So I want to see things sort of come together, and this is the stuff that I'm pointing out to people. So if you're watching my show during the day, if you're getting those, you go to TraderInsight.com/live-stream, and you can sign up for that. That's free too. So you'll get that every 2-3 days a week for the rest of your life. You're going to be getting a text from me saying, all right, I'm gonna talk about my strategy. We're going on air in a few minutes here. Here's the link. You can click to join. And what you're always getting is this. This is all I'm doing. I'm just going through and I'm saying, look, here's where your confluence resides. You've got a fib retracement on a support and resistance threshold that comes close to a session volume weighted average price that comes really close to a trend VWAP, and oh, by the way, it also overlaps with a 2 standard deviation move of volatility. So those are like Bollinger Bands kind of, but they're measuring volatility instead of price action. And what it's telling you is you got a high probability of a mean reversion, you've got a high probability of an inflection at a fib ratio, you get a high probability of an inflection at a support and resistance line, at the VWAP, everything's lined up. You've got a really good reason to be looking at this as a discretionary trade. So that is a big chunk then of the rest of my day. So I've got this thing on screen, watching this all day long, and this is one of the trades that I'm going to take if things set up. So you look at this and you're sitting there for 3-4 hours and you're just staring at this. What if they never set up? Well, the other thing that we're doing is I'm also looking at Amazon, Apple, Meta, Microsoft, Nvidia. I look at Netflix. I look at Tesla. I look at the Google. I look at all the big stocks over the course of the session. And what I'm watching for, if you watch the live show every day, what you know is I'm looking for things to be in the box. And when you look at these stocks here, these 4 that I grabbed from my screenshot that day, what you see is they're trading in the box. So they are trading In the case of Meta, it's had a day where the R2 pivot has become support and resistance, and we've got very, very clear support and resistance in terms of price action below there, price action above there, and price action relative to the volume by price breakdown. If you look at Tesla, you see that we've got a day where, price opened above the central pivot, so you're above the fulcrum for the day. It traveled up to the first resistance, it came back down, and then over the course of the session goes and retests those pockets of liquidity that it found earlier in the day over and over and over again. And while you're waiting for your futures trade to happen, while you're waiting for that triple Q to give you a signal that it's time to go long or short the NQ, you got a bunch of stuff here that's going on where if you're just sitting there, you can peel money off over the course of the session over and over and over again. Look at Netflix. Netflix, a real clear trend day on this day, goes up, gets into that box. So you've got travel significantly above second resistance for the session. You're sort of way outside. There's a distribution here that's been skewed. That this is a new travel range for the stock. And then you look at it and you see, oh, gee, if I just focus on this, spot 95 up to spot 20 up to spot 73, I've got a real good range here that I can anticipate is going to be profitable if I just wait for price to come back to it and then, take these little entries and exits. And, it's a significant amount of money, really, when you look at it. It's you're at least $1 between the bands, and on NVIDIA, you're going to be $3, $4 sometimes between the bands. That's in the bottom corner there. That used to be my nemesis. If you guys took the Trading the Magnificent Seven course that I did, then at that time I had a real love-hate relationship with this thing, but I figured it out. I figured out how to follow the footprints, the footprints of money over the course of the day, and where the buyers and sellers are hidden on this thing. And it was just a matter then of getting used to the swings and getting used to how this thing moves over the course of the session, and then how to react to those moves. So that's a day, and and it's workflow, it's time management, it's psychology, right? Because you're definitely shifting from the beginning of the day throughout the day. Later in the day, you're definitely putting on a different hat. You're definitely trying to figure out a different way to approach the market. And I think it's probably, that's a good enough reason right there just to say you're going to take a break. So when the opening price action is over and done with, you'll see, if you come on into the room and try 2 weeks of the mentoring, you're going to see, yeah, they're taking a break. And why are they taking a break? Because it's a different job. The opening is about focusing on program trades and focusing on pattern recognition on the 2SDs, and also focusing on that Apple trade. Later in the day, it's about focusing on the order flow and finding out where is the market itself. So we do the QQQs because I don't like trading banks and oils. So I'm going to use the Qs, I'm going to trade the NQ, and that's a big focus for me over the course of the session. At the same time, I'm going to focus on those Mag 7 technology stocks, because that's a place that we're very comfortable and we know how to go through and peel profits over the course of the day. All of this is manageable. All of this is doable. It's just a matter of, sitting down in front of the machine, having a game plan, knowing what you're going to do before you do it, and, not letting the excitement of it or, the anger of it or whatever it is get the better of you. You want to be in a position to take advantage of the opportunities that are in front of you. And for us, yeah, the strategies, super important. So you guys have seen me do, a ton of stuff on all the strategies that I trade, or you've read books about all the strategies that I trade. This part of it, not so exciting, right? Not a place that you're going to learn, a new trick. But this is probably, the discipline, the psychology, the time management, the workflow. This is probably 90% of what it's going to take for you to get a profitable trading business. You have to be able to manage your risk. You have to be able to understand the risk. You have to know what it is that a different time of the day is putting in front of you in terms of opportunity and risk. And you have to know how you're going to react to every situation that you have. All right, so I hope you've enjoyed this. I hope that this is something that gives a good kickoff to this show, which is all about this stuff. And if you have any questions, you can email me, adrian@traderinsight.com. I'd be happy to talk to you. I'd be happy to go through some of my ideas about this stuff. Trading is our passion. It's been our livelihood, and it has afforded us just a great life over the years. All right, thanks for joining me, and I will see you here next time.